Good evening, everyone. Welcome to Office Azara 24/7, and I'm here with all of you to discuss the first session on your principles and practices of banking. So, as you know, we have started a particular series for your JAIIB October batch, in which every day we are taking one particular subject with the concepts followed by the MCQs of the same concept. That is what we are starting from today onwards regarding PPB also. So every Friday I will be meeting with all of you on Office Azara 24/7 at 8 p.m. So do not forget to join these batches, because PPB, if I talk about the principles and practices of banking, this is a subject which has a huge syllabus in comparison to other three subjects of your JIB. Total units that you can see under the PPB will be is your 55. So we have a 55 units in the PPB, principles and practices of banking. So it has a huge syllabus, but many bankers find it very simple subject also. The reason behind it, whatever you are practicing in your bank, whatever you are practically doing in your bank, you have to study the same thing in this particular subject, but as a theoretical form. So that's why this subject is a kind of easy for all of you. You understand the concepts very easily, but yes, because the syllabus is vast and a lot of theory is there. And a lot of theories there, we have to remember sections, we have to remember act, etc. So for that, we have to memorize the concepts. We have to memorize a certain data here, and for this, we make sure that we complete the syllabus early so that we will be able to revise the concept also. Okay, so that's why it is very important to start PPB, and that's why you are all going to join the session at 8 p.m. every Friday only on Office Azara 24/7. Okay, so in today's session, what I'm going to take and what we are going to discuss, before that, first of all, welcome to the channel again, and those candidates who have joined us already, do make sure you share the session with your friends, colleagues who are preparing for the same JIB October 2023 paper. And I am your mentor, Amanjot Kaur, for your PPB, Indian Economy, Indian Financial System subject of JIB. Okay, so let's start. This is the first class, or we are starting a module A, unit 1, that is a banker customer relationship, a very basic chapter of your PPB. So you all know what kind of relationship you are having with your customers, right? But on the basis of the terminologies, we have to remember what kind of relation is known as what in the terms of banking. So before understanding the banker-customer relationship, let's understand two things first. The first one, let's understand what is bank, and the second, we are going to understand what is banking. Okay, so if I'm talking about a bank, what is a bank? Bank is simply a financial institution. What is a bank? Bank is a financial institution. What is a bank? Bank is a lawful organization. So you can call it bank is what? Bank is a financial institution. Bank is a financial institution, or you can call it a bank is what? Bank is a lawful organization. Why we are calling a financial institution? Because bank works as a mediator among the persons who have surplus money and the persons who have deficit of money. So bank work as a mediator to transfer that money, and it deals with the financial transaction. That's why you can call it a financial institution. Why we are calling it a lawful organization? Because it follows certain laws. Banking Regulation Act, RBI Act, NI Act, PSS Act, lot of acts are there in the banking sector that banks have to follow. Even RBI follow the rules or guidelines of the RBI Act 1934. Similarly, all the commercial banks have to follow the Banking Regulation Act 1949. So this is what the bank is. Now, what is banking? So if I'm talking about banking, so it's very obvious we are talking about the business of a bank. What is banking? Banking is a business of bank. Now, what is the business of bank? The three things are very important. The first thing is bank accept deposit. But this deposit should be accepted only and only for the purpose of lending or investment. For lending and investment, you have to accept this amount of money. And whatever the public wants to deposit, you are accepting that only because of one reason, for one purpose, that is lending or investment. And the next one is bank also provides what? Withdrawal facility. Withdrawal by using the documents, the required documents, or in a certain way that is allowed by the banks, will be the service of a bank. And this is the business of bank. What? This is a business or bank we are talking about. So bank is a financial institution, bank is a lawful organization, and what is banking? Banking is simply a business of a bank. Clear? Now let's start. What is banker-customer relationship? So first of all, if I'm talking about the banking means accepting deposit for the purpose of lending or investment and providing withdrawal on the demand of the customer. But this is not only the task which is performed by the bank. As you guys are working in a bank, you all know that banks provide mutual funds, demat account, insurance, pension fund, social security schemes benefit, then international debit credit card, and etc. Everything will be available in the bank. So bank works as an universal banking services. It is providing you universal banking services. Now different types of functions, or we can say services or products provided by banks right now, and that's why we are talking about here the different types of relationship between a bank and a customer. So if you are accepting a deposit from the customer, you will have a different relation. If you are giving a loan, you will have a different relation. If you are providing a locker facility, you will have a different relation. If you are having a demand draft or check clearance, etc., you will have a different relation. So on the basis of what? On the basis of services bank is providing to the customer, according to that, the banker-customer relationship will be there. Okay, banker-customer relationship will be there. And because bank is providing different types of services to the customer, that's why we have so many types of banking also. That's why we have so many types of banking also. Like you guys have heard about shadow banking, narrow banking, para banking, universal banking, virtual banking, Islamic banking, door-to-door banking, relationship banking, etc. So on the basis of the services bank is providing, we have different types of banking. Or accordingly, we have a different type of banker-customer relationship. So let's start this particular chapter with the understanding of the topic. So we are covering module A, and in module A we will be covering your topic, that is banker-customer relationship, module A, unit 1. You can see in module A we have 21 units. Only single module covers 21 units. It has a very huge syllabus. Okay. Now what is banker-customer relationship? You can see here the relationship between a banker and a customer depends on what? The nature of services provided by the banker. So what relationship you will have with your customer, it totally depends what service you are providing to your customer. Okay, that is the banker-customer relationship. Next. Acha, if I'm talking about banker-customer relationship, we also know that what I can say, there is a certain banker-customer relationship, and a banker-customer special relationship is also there. So that special relationship will be like, if we talk about garnish order, attachment order, they are the kind of special relationship bank and customer having. Today we are going to talk about the general banker-customer relationship. So for example, you can see here, there are lot of banker-customer relationships are there. Out of that, some examples is trustee, principal-agent relationship, beller-belly relationship, debtor-creditor relationship, mortgage or mortgagee relationship, etc. So these are the different types of banker-customer relationships are there that we have to cover. Or we are starting the first one with the debtor-creditor relationship, in which the debtor will be whom? The debtor will be a bank and the creditor will be a customer. Creditor means the person who is giving you the funds. And when customer is giving fund to bank, when customer deposit a certain amount of money in a bank, in that situation, customer becomes the creditor. Okay, it's a kind of debt you are giving to a bank, right? If you are depositing a certain money, it's a kind of debt service you are performing. You are giving your money to the bank, so you are the creditor. And bank will be whom? Bank will be the debtor. So first relationship we have debtor-creditor relationship. So when a customer deposits money with his bank or her bank, the customer becomes a lender. Okay, I deposited 1 lakh rupees in my savings account. I became the lender for the bank. Okay, and the bank becomes a borrower. What a bank is a borrower here. Clear? Next. So the money handed over to the bank is a debt. Obviously, if I am giving my money to the bank, that's a debt to the bank. And whenever I ask, bank have to return that money. Now there are certain types of features that has to be counted, or certain type of services that will be counted in the customer banker relationship, that is a creditor-debtor relationship. So the main feature of the relationship first is saying that the bank is free to use the money in a way the most beneficial to it. Like I have deposited my money to the bank. Now bank has this particular right that it can use my money in such a sense which can become more beneficial or most beneficial, best way to invest the money that bank can decide by itself. Next, the customer should make a demand of payment with the proper documentation by using check, withdrawal receipts, or you can use the demand draft or whatever the documents we are using for the payment that you have to give, and then you can demand for a payment. Okay, so the demand should be made in a specified manner. That's the specified manner. You have to issue a check, you have to write a withdrawal slip, and then you will be allowed to get the withdrawal from the bank. Okay, that's what we are talking about here. The demand should be made in what? In a specified manner to the bank. Next. So this is the debtor-creditor relationship in which we are depositing money in a bank and bank is become the person who is taking money from us. So bank is a debtor and we are the creditor. Now, just opposite. Now the bank become creditor. When a bank become creditor? When bank gives loan to us. So we have a creditor-debtor relationship and we have a debtor-creditor relationship. So here, once the creditor will be a bank and a debtor will be a customer, but also on the other side, a debtor can be a bank and a creditor can be a customer. But it depends who is giving money. It depends on who is giving money. Bank will be creditor when bank is giving loan to the customer. In that situation, bank is a creditor and customer is a debtor. Now, the bank becomes the debtor when the customer deposits its money with the bank. So in case of deposit, the bank is debtor. In case of loan, the bank is a creditor. That's a very simple concept to understand, and this is a very basic function or primary function of a bank, I can say. So you can see when the bank lends money to the customer is the borrower, okay, that is a debtor, and the bank is the lender, that is a creditor, that we have seen already. Okay, now lending money is the most important activity of a bank. Obviously, bank is accepting deposit just for the purpose of lending or investment. So lending is what? It's a important activity of a bank. Next, the resource mobilized by banks are utilized for lending operations. Customer who borrows money from bank owes money to the bank. Obviously. So it's very obvious if you are borrowing money from the bank, so you owe that money to the bank. You have to return that money to the bank. Okay, that's your liability. Now, so the borrower executes documents and offers security to the bank before utilizing the credit facility. It's very obvious. If you are giving a loan to the customer, you will ask a collateral. You will ask a security from the customer. And the customer have to give that back to you. Because the customer owes you a money. So a certain security you will get from the side of the customer, a kind of document or a kind of certain physical commodity of your bank customer can be given as a collateral. Like customer can give a car as a security when the customer is taking automobile loans, or the customer can give the documents in case of mortgage, because mortgage will always be an immovable property, and if it's an immovable property, it means it's your land, or it can be your shop, it can be your farmhouse, anything can be there, but it should be immovable. In that situation, you will give the documents to the bank only, okay, the maximum number of times. So here we are talking about possession, like who will have the possession. So you can see here, in addition to these facility we have seen, or services like the creditor, debtor and debtor creditor. In addition to these two activities, bank also undertake other activities that is mentioned under the Section 6 of Banking Regulation Act 1949. So Section 6 says that it's very obvious there is a business of banking, but apart from this business of banking, banks perform various forms of banking. Because business of banking is saying bank can accept deposit, and that deposit will be accepted for the purpose of investment or lending, and the withdrawal will be available. This is the business of banking. But apart from these three activities, bank perform a lot of services, bank perform a lot of activities. And what kind of activities are allowed to the bank to perform is defined under Section 6, which talks about the various forms of banking. Clear? This is what we are talking about, that banks also perform other activities. So depending on the type of service that is rendered and the nature of the transaction, the banker acts as, the different relationship will be there. Belly, trustee, principal, agent, lesser, custodian. So these are also the other relations that banks maintain with their customer while providing the various forms of banking services to the customer. Okay. So first we have bank as a trustee. Now first we have what? We have a bank as a trustee. Now what does it means and how it will be defined? Let's understand this first. Trustee means the person or the entity whom you can trust with. You have a trust on someone. So when I give a certain valuable document or any asset of mine to the bank, and I inform to the bank that this particular asset belongs to this particular amount of money, and I inform the bank that it is with you. So in that situation, banks becomes the trustee. So what is trustee actually? A trustee is a person or firm that holds and administer property or asset for the benefit of the third party. So I have given my valuables to the bank and I have informed the bank that this particular asset worth rupees, let's say 100 crores or let's say 50 crores or let's say 1 lakh, whatever the amount is. I have informed the bank about that particular asset. I have informed the bank about that particular property. And I have given that property to the bank. In that situation, banks becomes the trustee because I have given my property to the bank as a trustee. Because I trusted the bank. Okay, let's say for example, I went to the bank branch to have a certain service from the bank, and what happened in that situation? I left my something. Let's say I left my purse there, I left my like umbrella there, or whatever I had at that time. So I called the bank, I informed the bank manager, I informed the PO or whatever the person I have done a certain kind of business with. So I called them and I informed that I left my wallet there, I left my umbrella there, and it has this things available in that. And in that situation, bank becomes the trustee because I inform the value of that particular product or that particular asset of mine to the bank. And now this is the responsibility of the bank to take eye on that, to administer that, so that I will get the benefit out of it. Okay, so trustees are required to make decisions in the beneficiary's best interest and have fiduciary responsibility to them, meaning they act in the best interest of the beneficiaries to manage their assets. So my assets will be managed by the bank, and on the best interest it will be managed. Now, if a customer keeps certain valuables or security with the bank for safekeeping, or you can say it safe deposit, a certain amount of money for a specific purpose, the banker, besides becoming a belly, it also becomes the trustee. Okay, so that's what we're talking about. If you have informed bank the certain document or valuable you have given to the bank and that bank is managing on behalf of you, that's where the bank performs function of as a trustee, right? Next, belly-beller relationship. Belly-beller relationship is the same like the trustee, okay, but in a more comprehensive way. Let's see. Here the bank will be belly and the customer will be beller. So again, my certain valuables I left with the bank, I have given to the bank. So when a customer deposits certain valuables, bonds, securities or any other document with the bank for their safe custody, the bank, besides becoming a trustee, bank became trustee because I have given my valuables to the bank because I trust the bank. So bank become the trustee, but beside becoming a trustee, bank also becomes a belly and the customer is the beller here. Okay, so the same thing is there in the trustee and belly-beller relationship. The bank will be trusted with a certain valuables of a customer. Okay, so according to the terms of section 148 of the Indian Contract Act 1872, the bank becomes a custodian of the security of the customer and hence as a belly is liable for any loss caused to the beller due to its negligence. So what we are saying here, bank becomes a custodian of the security of the customer and hence as a belly, bank is a belly. So bank is liable for any kind of loss that caused to the customer, that is the beller, due to the negligence. Like in case bank neglected something and my document, my valuables has been taken by someone else or something loss happened to me, that bank is liable to repay me because I trusted the bank. I informed the bank about that particular asset, and because of the negligence of bank, I lost my valuable asset. I lost my valuable document, whatever it is. So bank will be liable in that situation. Okay, now next relationship we have agent principal relationship, where bank is an agent and the customer is your principal. Now it's very obvious we order a certain things or certain functions to our banks to perform. Let's say for example, I have to make payment of my LIC policy every month, let's say for example, or every year, whatever the maturity period of the document is, or not the maturity period, whatever the renewable policy of the policy. According to that, I have to make a premium of, let's say, 20,000. So it's very obvious. I thought like maybe after 1 year, I want to be able to memorize this amount that this I have to pay to the LIC. So I ordered my bank. I said my bank that do make sure on the premium date, on the submission date of the premium, you auto debit my 20,000 rupees for my LIC policy. Now I have given an order to the bank to perform. So the bank will become my agent because on my behalf bank is performing that service. If bank is clearing check, bank is making payment to another person on my order, that will also a agent principal relationship. So according to section 182 of the Indian Contract Act 1872, a principal is a person who delegates authority. Delegates means you transfer the authority to other person, namely the agent. So it is my authority, or it is my responsibility, or it is my thing to do that I have to pay 20,000 rupees to LIC as a premium, okay, after this particular duration. But I have delegated my authority to the bank. I have transferred my authority to the bank, like you are going to pay 20,000 rupees to LIC on my behalf, because obviously I have order. So in that situation, bank will be the agent and I will be the principal. Now, among ancillary services rendered by the bank are remittance, collection of checks, bills, to pay regularly electricity bills, telephone bills, insurance premium, club fees, etc. on behalf of the customer. So what is ancillary services? The related services you ordered the bank to perform, that is the ancillary services. I ordered to pay my premium. I ordered to pay my telephone bill every month. I ordered to pay my electricity bill every month. I ordered to pay my club fees, the renewable fees. So this is all when I ordered bank to perform something, the bank became the agent and I will be the principal. So in these cases, the bank acts as an agent and his principal became the customer. So I will be the customer, bank will be the agent. So the relationship of agency terminates on the death, insolvency, lunacy of the customer or on completion of the work assigned. I have assigned a work to the bank to pay my insurance premium, and I used to pay, or I only have to pay 5 premiums. So after completing 5th installment of my premium, the relationship will terminate. Or in case of death, or in case of any kind of changes in the services, that will be terminated. That will terminate the relationship between the bank and the customer. That's an agent and principal relationship. Clear? Now we have a lesser and lessee relationship. Now this lesser and lessee relationship is related to your locker facility. It is related to locker facility, and bank only will be liable in case of negligence, not in the case of like act of God. If you have seen the movie Oh My God, so they are the insurance company used a word that is act of God. Like if there was an earthquake, this not comes under our policy. This is the act of God. We are not going to reimburse for that. So this is what we are talking about. Section 105 of Transfer of Property Act deals with lease, lessee. The banks provide safe deposit locker to the customer for use on lease basis. Lease basis means on rent basis. If I am taking a locker from a bank, I have to pay a certain amount of rent, because that's area, that's premises that's related to the bank. It is owned by bank or it is rented by bank. So if I'm using any area of bank premises, I have to give rent for that. Okay, so here bank is a lessor. Lessor means person who is the owner of the property. Okay, lessee means the tenant. So customer will be the lessee. Lessee means the tenant. Tenant means person who is taking it on a rent. So I am taking on a rent, so I will be the lessee and the bank will be the lessor. Okay, so it will a locker facility. Now next, the relationship here is that of lessor and lessee of the licensor and licensee. Hana, licensor or licensee, you can also call it. Next, apart from this, the bank shall not be liable for any damage and or loss of content of locker arising from natural calamities. Or you can say the act of God, like earthquake, flood, lightning, etc. Because of this, whatever was available in your locker, bank is not liable to pay that. Okay, but yes, if there is a negligence from the side of the bank and because of that you lost your asset which was there in the locker, in that situation bank is liable. So bank shall exercise appropriate care for protection of their locker system and premises, Hana? But if still after the flood, it is not under the control of a bank, Hana? It has the responsibility to ensure that incidents like fire, theft, burglary, robbery, audacity, building collapse do not occur in the bank's premises due to its own shortcomings, negligence, and any act of omission or commission. So let's say, for example, bank employees know there is a short circuit in a particular room of a bank and they haven't get it corrected. In that situation, bank will be liable because they neglected that issue. Now, in instance where loss of contents of locker is due to such incidents or attributable to fraud committed by its employees, the bank's liability shall be for an amount equivalent to 100 times the prevailing annual rent of the safe deposit locker. Okay, so this is the lessor and lessee relationship. Lessor means always owner and lessee means the person who is taking it on a rent. Now, indemnifier and indemnified. This is a kind of relationship maximum low get confused in. So you can see indemnified or indemnity holder. So that will be the bank. It can be it can be known as indemnified or indemnity holder, and the customer is indemnifier. So before reading the content here, let's take an example. It will become very easy to understand this relationship. Let's say, for example, I went to the bank and I asked to the bank to issue a demand draft, because I have to pay my college fees and I have given a cash of, let's say, 50,000, 60,000 to the bank, and I said I want a demand draft. So bank had given me a demand draft of 60,000 because of I wanted to pay the college fee. I take that demand draft, I put that demand draft in my purse and I went to home. When I reached to home, or I went to college, when I reached to that particular destination, I have seen there is no demand draft in my purse. It means somehow I in the middle of my transportation I done from the bank to my home or my college, I somehow let's say misplaced my demand draft, and I checked that I don't have that anymore. So I went to the bank and I said, bank, that I misplaced my DD, I misplaced my demand draft and I have to pay my college fees because this is the last due to pay, and for that please issue me a duplicate demand draft. So can a bank say that no, we are not going to issue your duplicate demand draft or duplicate FD or something like that? No. This is the responsibility of the bank. Bank have to give the duplicate demand draft and bank will issue it because bank is a service provider and I misplaced it. So bank will give me a duplicate demand draft. But what, let's say if, for example, the other person from my bank has found out that particular DD in the canteen of a college and he gave that DD to the bank. Sorry, he gave that particular DD to pay his fees to the college. Now, in that situation, what happens? The bank have to pay the money for 2 times because I am also giving the money and bank also give, the other person also deposited the DD. In that situation, bank might face the loss or bank might face the problem. In that situation, banks do what? Banks made the customer, while the issuing duplicate demand draft, bank will made me to sign an indemnity bond in which it will be specified by the bank, like if because of issuing this duplicate demand draft, if any loss have to be bear by the bank for that particular amount of money, the customer, it means I will be liable. So in case in future bank face any kind of loss because of issuing me the duplicate demand draft, I will be the person who liable to pay back that loss to the bank. And on that bond, I will do the signature. I will accept that condition, and after accepting that condition, bank will issue a duplicate demand draft. And this is where this relationship comes in. So bank will be known as indemnified, indemnity holder, and the customer will be indemnifier. So I am the indemnifier. I am promising bank, yes, if you face any loss, because of issuing this duplicate demand draft, I will be the person who is going to make sure that your loss will be bear by me. This is the relation. Now let's understand. Let's read the theory here. Okay, so a contract by which one party promises to save the other from the loss caused to him by the conduct of the promiser himself or the conduct of any other person is a contract of indemnity. Section 124 Indian Contract Act 1872 talks about it. So it's very simple. We are saying like one party is promising to another party to bear the loss that is caused by him by the conduct of the promiser himself. Okay, so this is what we're talking about, the indemnity or indemnifier you can call it. So in banking, such relation occurs in transaction of issue of duplicate demand draft, issue of duplicate fixed deposit receipts. So then you have this relationship with the bank. So in this cases, the person availing the facility will compensate the other for any loss arising from the wrong or excess payment. Clear? This is indemnifier or indemnified relationship between the bank and customer. So let's summarize all the relationship that we have discussed here today in today's session. The first one is deposit in the bank. So it says bank will be the debtor. If you are making deposit, now the bank will be debtor and the customer will be creditor because I am giving money to the bank. Loan from bank. If I am taking a loan from bank, so I will be the debtor. I will be the debtor and bank will be the creditor. It's very obvious. Now, safe custody. Safe custody will make bank a belly and a customer a beller. In case of locker, we have just discussed, bank will be the lessor means owner and lessee means customer will be the tenant or the person who is taking on rent. Collection of check. In collection of check, it is what I am giving order to bank to make a certain payment on behalf of check. So bank will be the agent, I will be the principal. Purchase of a draft. Obviously, bank is a debtor because I am giving money to the bank and then bank orders the draft. So I will be creditor, bank will be debtor, right? That in case of purchase of draft. In case of payee of a draft, payee means the person who is the receiver. So in that situation, bank will be trustee and I will be beneficiary. I have given my demand draft to the bank because someone has given me demand draft for the payment. So I give that particular document to the bank, like this DD is related to 50,000 amount. So now bank will be trustee. I trusted bank, that's why I given my demand draft to the bank, that bank will definitely going to pay me 50,000 rupees against to this piece of paper. So that's why in case of pay, bank will be trustee. Okay. Now pledge, mortgage and hypothecation, if I talk about, these three are the types of collateral, these three are the securities, on behalf of which we take loan from the bank. So pledge and hypothecation will always be a movable security and the mortgage will be immovable security. In case of pledge, the possession of the security will remains with the borrower. Okay, with the lender. In the case of pledge, the possession of the property remains with the lender. Like for example, I am taking a gold loan. So gold will be with the bank. In hypothecation, the property is movable, but the possession of the property or the possession of the security remains with the customer. Like a car loan, I have taken a car loan, car will remain with me. In case of mortgage, I am giving a immovable property. In that situation, maximum number of times that immovable property's possession will remains with me. Not always, but maximum number of times. So in case of mortgage, pledge or hypothecation, you can see bank will be pledgee and customer will be pledger. Bank will be mortgagee and customer will be mortgager. Hypothecation, bank will be hypothecatee and I will be hypothecator. Because I am giving that particular security to the bank to take a loan from the bank. Okay, now standing instruction, if you are giving instruction, obviously bank will be agent, you will be principal. In case of sale, purchase of security on behalf of a customer, you will be agent, bank will be agent, customer will be principal again. In case of money deposited but instructed not to given for its disposable. So I have given a certain money to the bank, but I ordered the bank, do not use this money for the payment of insurance premium, whatever I have given the advice or order. In that situation, bank will be trustee, I will be beneficiary because I trusted the bank. Like you will save this money, I will use this money after 1 year, after 6 months, whatever I wanted to do. Articles left by mistake, I left something in a bank by mistake, again the bank will be a trustee. Like I have given you the example, I left my purse in the bank, that will be trustee bank and I will be beneficiary. Shares given for sale, I given the shares to the bank for the sale, bank will be agent, I will be principal. So these are the banker-customer relationship that we have discussed today, and this is on the basis of the different types of services that bank is providing to the customer. Okay, so now let's just start with the questions. I hope all the things, all the relation I have discussed with all of you is clear to all of you. So let's just start with the question. Also, those candidates who are watching us in the recording video, do let me know if you find any doubt. And those who are watching us live, do let me know in the comment section if you are facing any doubt. But I think I have explained the chapter in such a way you are definitely not going to have any doubt. But if you have doubt, you are most welcome to ask your doubts. Okay, now let's start. Bella-belly relationship is applicable in which case? Keeping article in safe custody with bank, demand draft issued by bank, safe deposit locker, cash deposited with the cashier by customer. Let me know which of the following is correct. Bella-belly relationship in applicable, it's very obvious, keeping article in the safe custody with the bank, because you have given a bank in the safe custody your valuable items that banks have to be safe, to make it safe for you. So that is keeping article in a safe custody. Second, a dash is a person or firm that holds and administers property or assets for the benefit of a third party. So a dash is a person. A dash is a person or the firm which holds and administers the property or any asset for the benefit of third party. So what is that particular third party is? Third party is customer. On behalf of customer, who is holding that particular asset or something, that is bank, or bank is a trustee. So right answer will be trustee. Okay, next. What relationship is created when the bank collects a check in clearing? So what relationship is created when bank collects a check in clearing? So it's very obvious, bank is doing clearing on behalf of you. So you will be the principal and bank will be the agent. So agent and principal relationship will be there between the bank and the customer. Okay, in the clearance of check. Now, when a bank lends money to the corporate person, the relationship between them is off. So bank has given money to the corporate person. It means bank has given a loan to the corporate person. In that situation, what relationship they will have? What kind of relationship they will have? It's very obvious. Bank is giving loan to the customer. So bank will be a creditor and customer will be a debtor. Whether it's a corporate, it's an individual person, doesn't matter. But if bank is giving loan, bank is a creditor and you are a debtor. Principal function of banks. So that's a principal function of bank. Principal function of bank means the basic function of bank is what? Accepting deposit, lending and investment, non-fund business and remittance services. Which of the following are the principal functions of a bank? So the right answer will be all of the above from A to C. All are the principal functions of a bank. All are what? All are the principal functions of a bank, right? So this is the banker-customer relationship, but again, as I say in every class of mine, that this is the introduction of the chapter related to your particular subject. But the chapter is in more comprehensive way. In the book, if you talk about the book of PPB, you will see the book have around 900 plus pages. So accordingly, we have to cover. If you want to continue this particular topic in a very detailed form, so it will be continued in the Mahapack 2.0, in which all the Sankalp batch, all ebooks, test series, live classes, PDFs, everything will be available. Okay, so this is your particular Mahapack that will be available for all of you. And last but not the least, if you are new to the channel of Officers Adda 24/7, do subscribe the channel and press the bell icon. Okay, so thank you for joining the session and take care, and do not forget to meet me every Friday at 8 p.m. for PPB. Thank you all.